Best way to start, Joseph, is welcome to Ask an Angel. We're excited to have you here today. Thank you for joining us.
Appreciate it. It's I don't do many podcasts, so it'll be should hopefully be a new and fun experience.
I love it. Well, we certainly will. We do our best to make sure that it's brings a lot of value and helps our listeners learn more about you, but also learn more about the investment community in the world and how it works. So the best way for us to start is if you can provide a bit of a background on yourself,
Sure.
where you've been, where you're at, where you're going, and then one thing about you that nobody will know.
One thing. Okay, I'll see if I can remember all of that. But so a little bit of background on myself. I did my undergraduate at University of Chicago in economics. I kind of started my career in Silicon Valley during the first dot-com from 97 to 2001. I did some technical consulting, some technical sales, product management, and then I decided after the dot-com bust to go back and get an MBA. So I went and got my MBA at Columbia Business School from 2002 to 2004, and then afterwards made a little bit of a career switch to capital markets, and I spent 10 years in and around Wall Street doing mostly structured credit and structured products, 8 years in New York and a couple of years in Hong Kong. Then in 2014 came back to be closer to family. Decided I'd had enough of Wall Street, or wanted to kind of just switch careers again. Got involved at that time in real estate, both on the residential and commercial side. So these days I invest in commercial real estate mostly as a limited partner. And about that same time, kind of fell into angel investing. If I'm being truthful, had some guys kind of that I knew that were looking for funding in an early stage company called Exern. They do big data out of New York, and was familiar with them. And I thought that this is an emerging kind of market and should jump in. And just got lucky. They recently, I think, raised an A, and I think their last funding round was at a 40 million valuation. So I'm one of the earlier investors there. These days, I spend my time looking at real estate, angel investments, and some smaller private equity deals.
Perfect. That sounds pretty exciting. And one thing about you nobody would know.
Uh, Probably for your listeners, I spend a lot of time doing Brazilian jiu-jitsu, so it's not that it's not public, but I don't think you would know just from looking at my LinkedIn profile.
So you got a bit of Ois Gracie going on.
That's right.
I love it. Well, it's a great skill to learn for sure.
Yeah.
So I want to kind of take a step further back, because what I'm excited about and learning from you, Joseph, is that most of the time, everybody investor wise, they kind of fit into different buckets. Some are accountants, some are legal, some are product managers, some are experts because they worked in one category for a long time. But one thing that's pretty unique that you're doing is that you kind of gone through this capital markets, in the money, working with dollars, and derivatives and things like that throughout time. And I want to kind of explore that, because I think a lot of that, when it comes to numbers and investing in companies or in the markets, having an understanding of how that all works plays a big part. And I'm going to say over the years, for making it pretty comfortable to jump into early stage investing. So maybe you can tell us a little bit more about that background on working at those times in the big banks and on the derivative side, and learning more about how money works and what that experience was like.
Yeah, I mean, I don't know if the skill set of working in capital markets transfers over necessarily directly. I think that I have a pretty diversified and well-rounded background, from the 5 years in tech. Obviously, the capital markets help kind of just understanding the lingo and valuations. I think, angel investing is kind of like an apprenticeship, and it's kind of like any job. It's a lot of it's on the job training. So, if I were to say, a recommendation to some of your listeners how to get started is, paper trade, get involved with some syndicates. You can kind of cut your teeth and see what kind of deals that they're looking at and how they kind of approach. I really do think there's a process to learning. When I first started, I was kind of all over the place as far as, where I invest and, what kind of companies I invest. These days, I tend to be a seed to Series A investor, just because I invest my own capital. I've seen a lot of pre-seed kind of early stage startups, just, too many name that fail or just not a good business idea, or even if it was a good business idea, the leadership can't execute. So because of that, I try to de-risk myself, but still, I feel like from the seed to Series A kind of spectrum, I can add a lot of value as an angel investor. After Series A, the check sizes get quite large, and they bring in professional venture capitalists, and so not only can I not add as much value to the founders, when I usually invest in companies, I like to, if the founders want, I help them do business development. I help them, I try to be more than just capital. I try to bring in other strategic investors. I deal with a number of other high net worth individuals, family offices, and VC funds, like later stage VC funds. And so I try to bring that in, or strategic partnerships with other portfolio companies that I might have in my portfolio.
Which are all like, that's obviously huge, huge value for the startup and the entrepreneur that's running the companies. And if we go back on the numbers side, being able to understand the markets, understand the lingo, even jumping into your tech side of things, do you find that having that experience has opened up the door to this angel investing and helping you reduce the stress or the risk of jumping into this?
I think the risk is still there, right? I mean, you have to, I don't think any angel, nobody can say that they know everything about all things, right? All industries. So you kind of got to pick where you're most comfortable. And obviously, I have a fair bit of prop tech in my portfolio just because of the overlap with real estate. But I'm not opposed to that. Kind of the qualifications that I look for is, product market fit. You have to have some customers and revenue. You have to have a large moat and a big TAM that you're addressing. For people who don't know what that is, that's total addressable market. And the founders need to be competent. Obviously have to get along, but have some core competence in the vertical that they're trying to disrupt.
And you mentioned the TAM side of things. So you're obviously going back to your market experience. So are you looking at companies? Are you doing that homework? Are you going in and saying, you know what, I need to figure this out, because if I'm going to make an investment, I better figure out if this is real or if these guys are just selling me?
Right. So, part of the due diligence, first it's usually an email intro. Hey, look at our deck. I'm a numbers guy. I like to look at the deck. I like to look at a pro forma, because I think that's often overlooked. I think that a lot of early stage founders don't bother putting together a pro forma, but I kind of see it as a flag. Like, if you are not able to, or too lazy to put together a pro forma and think about how you're going to be spending your investors' dollars, do I really want to be investing with you? A good pro forma is, we know that they're kind of projections, but it's a roadmap, that you can track week by week, month by month, to see, am I hitting the metrics? How's my cash position? And that's got to be reassessed every month, right? Either your revenues are, blowing out the numbers, and that's great. You won't need to raise as much, or, you'll get less dilution in the future, or you're burning extra high, and, you're going to have to get funding, months earlier. So being able to understand that and really, not get jammed up, I think it's critical. So that's an important piece. When it comes to the decks, it's, TAM is important to, but you can kind of get a sense. Like, I don't have the exact size of, let's say, the real estate market in New York off the top of my head, but these are all things that you can fact check. And, it depends what source you're using, right? Different people have different ways of looking at TAM and SAM and whatnot. So, but that's not the most important piece, right? I want to make sure that's large, you're not in a super niche space, but, that's pretty easy to find out. Just do a Google search.
So in this, maybe you can dive a little bit more into this pro forma and what you like to see in it, because it is quite important. And I feel it kind of comes from your prop tech space, because a lot of that is exactly how you're buying into a lot of properties. They're giving you all the facts, all the data right up front. And you can find out nowadays, a lot of the systems are telling you, what's the walking distance to this place and what is this value. So there's so much data that's built into prop tech that really helps you decide if this is going to be a good investment. But then early stage companies don't tend to have as much data and reassurances and things that are built into it. So there is a lot more risk. So right. Can you define more of what that pro forma looks like for a startup?
Yeah, I mean, I want to see kind of what kind of margins you're contributing. Usually, when you're talking about SaaS-enabled companies, the gross margins are pretty high. I want to see what your projected burn is at kind of full deployment. I want to understand, if you're raising 1 million or 2 million at the seed level, how much runway does that buy you? How many FTEs or employees are you, currently at, and what are you looking to ramp up? What's the sources and uses of the money? There's a lot of detail that goes into that, and I would recommend for folks who are, not as proficient with, kind of the financials, kind of understanding, all of this is, you can get smart on it online. There are plenty of free resources to understand, what a balance sheet is, what cash flow, what income statements are. And again, these are just projections, but I need to understand, does the entrepreneur, have, are they making reasonable assumptions? And those are important, right? What's your LTV and CAC? So CAC is a customer acquisition cost. LTV is lifetime value of your customer. Is that ratio appropriate? And there's no hard and fast rule, but there's some general rules of thumb, and depending on what kind of startup it is, right? Obviously, if you have a LTV ratio that's very large versus your customer acquisition cost, that tends to be very favorable, and that would be something that would jump out to me. And if it's the inverse, then that would be a red flag that I would need to drill in and say, why is your LTV to CAC low? And how do you guys plan to improve that?
So there is a lot of dependency on the numbers. So when you first started working on the investment side, and you shared earlier that you kind of got thrown into this mix, did you automatically kind of go into what you knew and what you learned before in your past, and you're just like, okay, I need this kind of information to make this investment? Or did you just jump in because they're like, buddies, yeah, here's some money, good luck? And then after that, they were kind of like, hey, we're doing well. And you're thinking, hey, that wasn't a bad investment. I did well. I think I'm gonna do this again. And then you started looking at it going, wait a second, maybe I need to bring in some numbers here. Maybe I need to ask more questions. What kind of, how did that process work for you?
Yeah, I mean, if I'm speaking truthfully, I think, like I said, I kind of fell accidentally into it, and I knew enough to be dangerous, but I wouldn't say I was super efficient. And like, I think it's like life. I'm a lifelong learner. I believe in just iterative processes, and I think every time I look at a company, every time I invest in a new company, my process gets better, it gets tighter. I'm always learning. Especially as a one-man shop, I don't have analysts. I don't have a lot of resources. So, each time get a little better. When I first started out, I didn't even look at pro formas, and so, some of the early investments were just more based on, what's the market opportunity? Does the technology seem reasonable? Are the founders qualified? Okay, go. But, I got lucky. I mean, so far, some of those earlier companies are still around, no exits, but up rounds. But, as the process, as I've gotten deeper into the angel investment world, certainly, just learning from other angels, learning from other VCs, what they like and what they, what to watch out for. Because I think, one of the great things about angel investing, and this is one of your questions, is why do I do it? I do it because, well, one, obviously I'm a capitalist. I expect a return on my capital, but it's super interesting, and the ability to work with people who are, type A players, super motivated, and doing really, really interesting cutting edge stuff, and helping to push that along, and hopefully some of the companies that I invest in turn out to be, impactful, not only, for my bank account, but also for society, right? You could argue, whether, Google is, is for, whether you like it or hate the company, they've, brought a lot of value to a lot of people.
Oh, that's for sure. Yeah, a lot of the big tech players have done that in a massive way. But now I think as they've grown as the size they have, are they now changing what impact they're bringing to the world? And are they becoming the oil industry of the world, where we're all kind of against it because it's a pollutant and it's bad? Well, has Google now gone to that side of things, where they're kind of changed from, this was amazing, how much I learned from Google searches and everything else, to now their ads and everything are intrusive. They're reading my data, they're reading my this, and they're feeding me with this, and they're now controlling so many elements of my day. Have they gone too far? So I guess it's part and parcel to the industry, but have these players all grown too fast and grown too much because of tech?
Right. I mean, Google, I think, is easy to pick on because they're so large. I think they're less invasive than some of the other social media companies who, really their goal is to get, spend as much time on the screen. And I understand that they're a business, but, is that a positive net to society, for, especially for younger folks? Don't know. And, as an investor, that's something that I think about, what impact, getting more and more into impact and ESG investing. And for people who don't know what that is, that's environment, sustainability, and governance, I believe it stands for. So these are companies that obviously they're for-profit companies, but they also have a mission where they will hopefully impact and be beneficial to society rather than be a kind of a detriment.
Well, there's been a lot of great things that have come in the impact society and on the environmental side too. Just a lot of the businesses are now trying to focus on this, even from Amazon all the way across, that they're going to be carbon neutral in the next 5 years, and how they're going to get there, buying up credits. Now there's credit businesses. So it's pretty crazy how far tech has come and how much it's been an enabler of business, and how it's pivoted out of the old school ways of doing things and really built up many, many new industries. When you look back at your original tech selling side and the things that you were working on back then, do you feel that, well, one, the world's changed significantly, but do you feel that you were able to keep up with the pace of technology change? And
I think it's very difficult for anybody to keep up with all, technology is just so vast and wide, right? I mean, you have hardware, you have software, you have, so many other things that you could peripherally call tech, cryptocurrency, Bitcoin, cryptocurrencies, hold the pole blockchain. Quantum is another space that also falls into tech. So, and there's deep tech, right? And so I don't personally invest in deep tech, not because I don't think it's a good investment. I just think it would take too much for me to come up the learning curve to unless I had access to somebody who was an expert in the field. Now there are ways that you can do diligence without having that technical knowledge, but that's probably a more advanced discussion.
No, for sure. But like you said, you're a global learner, and you're always driving out to figure out these types of things. So I'm sure this isn't going to be wouldn't be a tough one when you're thrown in front of a real deep tech company, and it sounds pretty exciting. I'm sure you'll figure it out before you make that investment, regardless. So it's a fast moving pace, but we got Google. We can research as much as we can and learn from those founders too.
Absolutely. And I think, if I were to, like, I'll give you an example. One company, and this kind of ties into that ESG impact theme, is a company I'm invested in called Tigris, Tygrus. They're a specialty chemical company, probably one of my largest angel positions, super bullish about it. But, I'm not a PhD in chemistry. I have no idea about chemistry. So, how did I do due diligence on this company? One, there's a lot of, they have patents in the public information space. They have a bunch of advisors, which I called, who are reputable, and, you can Google their advisors, and spoke directly to the advisors. Obviously these are people, thought leaders in the industry, and, they wouldn't be associating themselves with a fly by night company. Two, you can look at, kind of contracts that they may have signed, talk to their customers, say, are you really purchasing this chemical? Those are things that can kind of validate, does this chemistry work or not? I like that company in particular because it's a little bit different than software. Software, you have to get product market fit. You have to make sure your code's not buggy. With chemistry, it's the law of nature, right? It either is a chemical compound that works or it doesn't, and that's it. It's binary. And once you prove yourself that it's binary, is the business model, does it make sense? And the reason why I like this company, they have 80% gross margins, 50% net margins. They're pursuing a licensing model, so it scales beautifully. And just really great hair on the experienced founders. So those are, wide moat, 21-year international patents, and technology that and a core team, a management team that I think can perform.
I like it, and there's one thing or a couple things in there that you brought up that I really like, and one was that you called the advisors. I can say that I've never heard anybody say this, and I think it is pertinent to anything you do in a business when you're making an investment, especially if you're going to make a large investment. You should be calling everybody and their grandmother to find out how much information they know, what they're willing to share, how well they're embedded into the company, because the success is going to be bound to these people that are benefiting or that are working with on the outside and the inside of that business.
Absolutely. I think anybody who's asking for money from you, if they're not willing to open up and speak about it, that sets off all kinds of red flags. Being able to talk to customers, partners, advisors, all of the above, and other investors, potentially. Now, listen, it depends on your check size, and some founders may or may not be amenable to that. But certainly as part of the due diligence process, what's also helpful is, me being a small angel investor, depending on the company, sometimes, I like to make sure that they have a lead. So, what a lead is some kind of venture or institutional money that's kind of done the heavy lifting as far as background checks and all these things. And if they have a lead, that gives me a little bit more, especially a named, venture capital, it gives me a little bit more comfort. I still have to do my own due diligence, but, I could be fairly certain that these guys aren't, outright running some kind of Ponzi scheme or something like that. It gives me a level of comfort, to kind of go down there.
So would you advise the startups to, when they're building their data room, to be a little bit more open and sharing this type of information so it's readily available for the investors before all of this happens? Or do you think it should come out in the questions when, you're doing the due diligence and you ask this to move it forward?
I think a brief email with an exec summary or a short deck that kind of gives the high levels is kind of, usually the way things open up. And if there's interest, the more data you can show and build your case, it's always helpful for investors. For me, if I have to go and ask you for a data room, this doesn't reflect, it's not that it doesn't reflect poorly, but the more I feel like I understand about the company, that gives me, at the end of the day, you're making a decision to invest money. And we know that angel investing is a high risk kind of high reward business. And so, 9 out of 10 or whatever the numbers are of companies probably won't, be that successful. Or fail. And so I need to get comfort around that. And how do I get comfort with early stage, companies that may not have that many customers or not much revenue? It's about that data room. What kind of progress, are you making? Maybe it's not on the revenue side, but your users are there, or maybe you're in deep talks with the Department of Defense. You're running some trials there. Those are interesting nuggets of information that would help a founder build their case.
Agreed. So you also mentioned looking at contracts of existing customers.
Yep.
That they have, or maybe even going to the extent of being able the option of talking with some of their customers. Have you found that they're also open to that and allowing for you to kind of move into that space and start investigating? And have you had any pushback, or are you kind of going in with the approach, hey, I'm going to help you sell this through even better? Because if I'm talking to them, they see that you're growing. So there's a potential of me talking to them, it's going to bring some extra value. So is that kind of a drive into that at the same time?
Yeah, I mean, look, I think it depends on the founder, and you kind of have to take it on a case by case basis. I mean, it's harder to ask if you're writing a $10,000 check versus a $250,000 check, so you have a little more leverage there. But I don't think if you're going direct and not through a syndicate, that's a little bit different situation. But if you're going direct to the company and they're asking you to write a check, I think you're entitled to ask for those kind of things. Now, I wouldn't come with a laundry list of 100 things, but hey, do you have any advisors or customers that, would give you a good reference or I could talk to? Now, if they do, now you should expect that they're going to give you their best customers and best references. You should try to spot check that with, somebody that's, maybe didn't have a great experience, or they haven't listed that as a customer, but they haven't listed as a reference, and see, how their experience has been.
And that's just doing your homework, right? Diving in and exploring, seeing what you can find on Google again, and see what information has been shared. Because you can't do this in the public markets. You can when you're investing in big companies, but they're not going to reach out and tell you, yeah, go and talk to this company because they invest in us, like Apple or someone. They're not going to be sharing all of their deep investment portfolio because you want to invest $100,000.
Right.
Maybe if it's 100 million, there's a different deep dive in it. But
Right.
when you're working at an early stage, it really does make a big difference for an investor coming in and risking their early capital to help you move a business forward. And they really want to make sure you're on that truth line, if that makes the most sense. And
Yep.
it balances all up and everything checks itself out.
Absolutely. Absolutely.
So you've kind of talked about a bunch of different aspects of the investor side, and of course on the startup side. Is there something along the lines that when you're working with these startups that you'd like to see more of, that they don't actually provide enough for, and that you spend too much time asking questions on? Is there something like says we need an international standard for how an early stage company should be providing information or opening the door up, or when they should go for money, they should do these three things? Is there something that stands out to you?
Are you saying post investment or pre-investment?
Pre-investment.
Okay, so I'll make two comments. We'll talk about the post investment because that trigger a thought. So pre-investment, listen, as I said, a data room is always helpful. Your financials, if you have some, your deck, and a list of, the deck should be, concise and I prefer when it's not just a long paragraph, but you're like, you understand and you can explain it. Like it should be, the problem is you got to assume that most investors, especially angel investors, they probably don't know a whole lot about your space or your vertical. So you've got to educate them, and you got to kind of, for better or worse, kind of break it down like a sixth grader and say, okay, this is the problem. This is how we're solving it. This is how we make money. And, kind of stepwise, like, oh, okay, that makes sense. Okay, it's a large problem. You have some technical solution that assumably has a, some kind of moat that, other people or take a long time to develop. And you have great economics. You can charge, $300 a month or whatever the number is to do that, to get meaningful revenues. And, another piece about the pro forma is like, how long is it going to take you, in your projection to, get to cash flow break even, right? Which means that, oh, I no longer have to raise, or at least I'm getting to some size, right? I don't like companies that take, they're like, they're bet the farm, they're binary 0 or 1. We're gonna just give it away. And look, it's not to say you can't make a lot of money. LinkedIn did this very classically. They for 10 years or whatever the number is, they didn't monetize, and then they started monetizing. But by then they had this massive network effect. But in general, that's very difficult to do. Spend hundreds of millions of dollars, spend 5 years, hopefully getting this community and network, and then trying to monetize. I would prefer, companies to really test it out early and say, can you really get somebody to pay for this, and can you build that? The second comment I would say is on the post investment, and you asked, what could they, founders do? And this is even pre-investment too, is communication. I think, if I pass on a deal because you're too early, or, it's just not the right time, whatever it may be, you should be having some kind of regular updates to your, potential investor base. And I don't think enough founders do that. It's not hard to put out a monthly or quarterly update, like, oh, this is what we've done. And that keeps investors engaged. Maybe I'm not a pre-seed guy, but by the time you guys get to seed, I've seen the progress, and and you've developed a relationship. And furthermore, on the post-investment side, I don't think, some of my founders update me quarterly, which is fine. I'd like to see more often. And not because I am trying to micromanage, but it's just like, it's good to get an update. But I don't think founders lean on their investors enough for resources. Oh, could you introduce me to so-and-so? Could you help me find an engineer? Do you know a portfolio company that is interested in this? So those are things that if you have a good cap table and you have good angel investors who are motivated, I'm motivated. The moment I write a check, I want to help you as much as I can. Now, I don't want to, I'm not investing for a job. I want to be passive, but I want to give you strategic advice, if you want it. I don't say, every investor or every founder that I invest in has to take that advice, but it's there, it's available. And I don't think enough people take advantage of that.
Wholeheartedly agree with that. And communication is key, but it also invigorates you to find areas that you wouldn't think of. Maybe that, oh, I met that person last week, I could introduce them. So there is a lot of value that could come out if they continue to communicate and share with you as an investor, or even as just someone that's been interested in what they're doing.
Right.
The thing is that if they were interested once, you could probably interest them 4 or 5 more times, especially as you start to communicate and share the growth or the opportunity that keeps getting bigger and better in the business.
Right. And I think you should be sharing both positive and negative results. I don't think enough. I think a lot of founders shy away from like the problems they're having because they're afraid their investors will get mad or whatever. I would rather know about a problem months in advance, and before you run out of money and maybe I can help you, or at least I know that you have, issues. But don't come to me, when you're like, your last dollar's in your bank and you're like, oh, we need some more money because to bridge us to the next round because of this, and I'm not going to have very much sympathy for you because you just haven't been communicating, and I can't help you. It's too late.
Yeah, earlier the better. It allows you to jump in quicker too, right?
Absolutely.
Yeah. No, very good. Awesome. And you mentioned in previous recordings and other things that you can sometimes do to help circumvent and move and de-risk. And one of them was doing things like an SPV. Is that something that's common in things that you do or that in the network that you work in? Do you like doing those types of vehicles, or do you rather have just straight in work off equity and build into the company?
So is the question, do I like forming SPVs to invest in startups? Is that the question?
Correct. Yep.
So I have done so, obviously through syndications. I'm that the syndicators will naturally build an SPV, and I think that's appropriate. When I'm just angel investing, I usually go direct. At some point, I may look at, putting all my investments into an SPV. I think that just the additional filings on the tax side and just dealing with all that stuff, it's relatively unnecessary, at least at the size I'm doing. I think if you become a super angel like Jason Calacanis or Chris Sacca, then those guys obviously have a lot more resources and bigger teams, and it makes more sense for them to do that. I don't think there's any tax advantages. I think it's more from a liability protection side of things. I'm less worried as a LP investor of getting sued if the company gets sued. I'm more, I think it would be more just general protection, but I have, umbrella insurance, so, it's more personal protection of your assets, right?
I like it. And just the last question, just because you mentioned it, and it's a fantastic point. Maybe give us a little bit of an understanding of what umbrella insurance is for the average investor that would be jumping into this.
Yeah, I mean, you can get it through your whoever provides your homeowner and car insurance. I mean, I think I have a $5 million policy. It's to prevent, things like if I were driving down the road and somebody jumped out in front of me and I accidentally killed them, there would be a lawsuit, a civil lawsuit involved, probably, hopefully not any criminal, but that could be meaningful. And if you have, real assets, private, investments, they could potentially go after that. But if it's in an SPV, depending on how you set it up, you may, that may give you a little more protection. But again, I'm not a lawyer, so consult your lawyer for your best structures to put that together.
That'll be on our next show, but I love it. But thank you very much for that. All insightful. I think now what we're going to do is we're going to kind of jump into the rapid fire questions. Some will be a bit of a repeat because we're reemphasizing some of the conversation that we have had. But so far, I think you've rounded out both sides, thrown out some good advice. But let's jump into the questions.
Sure.
Well, you talked about how you got started investing. So maybe the bigger question is, why do you invest in startup companies?
Yeah, I think I touched on it a little bit in the beginning of the conversation. One, I think, I'm looking for a outside return. As I mentioned, I do real estate and angel investing. Real estate is kind of the core, and that kind of pays the bill, and it's, slower growth. And then I'm looking, I'm unicorn hunting, obviously. I'm looking to really expand my portfolio. Two, I think, as Jason Calacanis said in his book, it's one of the best jobs you can have because you're working with super smart people, super motivated, and they're doing really interesting things, right? And as I mentioned, I'm a lifelong learner, and I think you have to have that desire to want to learn and explore new business ideas and verticals. And I don't know everything about everything, and anybody who claims to do so is probably lying. Um, but I enjoy that process. I know nothing, I didn't know much about, quantum security. I invested in a company called QSecure, QUSECURE.com. They have a post-quantum encryption solution. I think it's super interesting. They mentioned it's a $1 trillion problem that's coming, in the next couple of years. To me, that seems like an opportunity. When you think about okay, security is based on keys right now, but everything from IoT devices to the military's unmanned drones have some kind of encryption, right? And when quantum does finally come online, they're going to be able to break these RSA keys, in seconds, minutes, where it would take millions of years or what, thousands of years from a supercomputer currently. Well, if that's a problem, because we have, foreign nation states like China and Russia allocating billions of dollars, 10, 20 times X what the US spends. I would be concerned. I think that's the new, and this is a little diverging from the Angel, but I think on a political side, I think that's where the new battle will be fought.
I love it. Agreed. And it was one of the companies that you shared that I did actually have an interest in, as a side note.
Fantastic. Well, happy to introduce you. We can talk about that offline.
Perfect. All right. And your favorite part of investing?
Favorite part of investing? The exit, obviously. I think, I had one of my portfolio companies, DocSend, just got acquired. Wasn't in there for very long. It was done through a syndicate, but probably 4 months ago I invested, and it's always nice to get a win. Was it a great IRR? Not huge on the MOIC, which is multiple on invested capital. But a win is a win, and so I'll take that. I'll take that capital back and redeploy that. So yeah, then and then just chatting with entrepreneurs. I'm invested in another company. I'm an advisor to a company called Super World. They're building a kind of the platform for the next Pokemon Go, which a lot of people don't know was the fastest company to $1 billion in revenue ever. And so and it's on the back of blockchain. So they play in AR, VR, and then the real estate plots are non-fungible tokens or NFTs, which are very hot right now. So they're in a very exciting space.
Awesome. Any verticals that you like to focus on?
Well, I mean, prop tech, because of the real estate, I love prop tech. I think there's a lot of inefficiencies in real estate. I'm relatively agnostic as far as vertical. As I said, I don't do direct consumer. I must say I do B2B only, US domiciled. It's not that I don't think you can make money in direct consumer. It's just, it's an animal that I haven't yet figured out. I find it very fickle. But if you get it right, Dollar Shave Club and a lot of these other companies, you can make quite a bit of money. But I just think it's very expensive and difficult to build a brand. And that's kind of, I think, the biggest determining factor for startups in general. But when you layer on that you're selling some kind of CPG product or something like that, it's tough. It's tough.
Agreed. How many companies do you invest in per year?
Last year, I didn't count. I think I did, roughly 10-ish. I have a little more than 30 companies that I've either done direct or through syndicates. It really, I don't have a target number. It's just, do I find interesting companies? And I don't ever want to be under the gun to like, oh, I've thought about doing a fund, and I may do it in the future, but there's different responsibilities that come with investing your own capital versus being a fiduciary for other folks' money. I think when you have a fund, there is a huge kind of motivation to deploy that capital because you don't want that cash just sitting around drag. But that's sometimes I feel like makes venture capitalists make suboptimal investments. So I'm not saying that that is bad. It's just not how I like. I rather take my time, and if I go a whole year and I don't find a single investment, I'm okay with that. If I find 10, then I've got a. That's not a bad problem to have, because I do have limited capital. I invest my own money. It's not like I can go out and raise another $10 million fund or $20 million fund to do that. So I have to kind of keep my dry powder for opportunities.
Awesome. Do you lead rounds?
No, I do not lead rounds in general. I'm like I said, I'm a smaller angel guy. Somewhere between 10 and 100,000, depending on the conviction. But I try. My whole goal in life through real estate, private equity, angel investing is to have multiple passive streams of income. For when I retire. So that's just kind of the game plan. And I think diversification through a lot of small bets is kind of one way to hedge yourself. I can't control the market. I can't control the operations of the company. But I can control, where I allocate my money and how, what the concentration is.
So from your initial conversation with a startup to the investment period to make an investment, how long does that usually take you?
It really depends on the company, how quickly they can get me information back, and how quickly I can do the due diligence. I mean, I've made investments as quick as a few days, a week. Sometimes it takes me a month or two because the founders are busy or I'm busy. So there's no hard and fast rule. I just have to get a comfort level. Sometimes they're trying to close around by a certain date, and I miss that date because either I can't get to it or the data's not there. And I think, there is a little bit of FOMO, but I think as an investor, you have to realize that there'll always be another startup. There's, other opportunities. Is it going to be the next Google? Maybe, but I think of the law of large number, it's highly unlikely. So, just, be disciplined, stick to your thesis, and try to, as I said, diversify across a lot of different little companies. If you put it all in one company, there's a strategy that people do that, but I think it's risky because so many of these startups fail. And so, I'm trying to make 100 bets and, maybe one or two of them, pay for the rest, as opposed to making just one big bet and putting all my eggs in a basket. And then having something, maybe the founder dies or maybe, bigger competitor steps into the space. I just can't control that.
For sure. Do you have any preferred terms that you like on investment, like pref shares, common equity?
I mean, I would like pro rata rights, for follow on. Obviously, that's good. A pref would be nice. I look at the terms. Discounts if you're raising on a note is always appreciated. People will do that. Warrants are great. I don't ask for them, but if they're offered, certainly take them. But yeah, no, I just like standard terms. I don't like anything too crazy, like out of, not market terms. If you're coming, with a valuation that seems appropriate for your space, then that's great. But don't have like, 100,000 in ARR and ask for a $50 million valuation. Know your multiples, know your audience, do a little research. It's on my LinkedIn. My whole portfolio is on my LinkedIn, and it tells you specifically, I am a seed to Series A, B2B, US domiciled investor. You know, don't waste my time or your time by sending me. And I'm not trying to be, disrespectful or not friendly about it. I just think that it's not a good fit. I have a certain thesis. So, sending me a pre-seed deal in a direct to consumer company, it's probably going to go in my trash box or I'll file it for later. So it's a waste of your time and clutters up my email as well.
No, it makes sense, and being direct, and it helps everybody move faster and helps you get to where you need to be and investing in the right companies faster, right?
Absolutely. Time is the one resource that we all have, but can't buy more, can't make more. So, I'd rather just tell a founder, a quick no, and, so they can move on, because not every investor is right for every company, right? You've got to find that good fit. Some people love direct consumer. So great, go talk to those guys. I'm a B2B business to business guy. I mean, I do have some direct consumer in my portfolio, but my thesis now is business.
Yeah, well, you're sharpening your thesis over time, right? You're finding where you like and where you provide the most value. So it makes sense to shape everybody into that funnel so that it works better and more convenient.
Absolutely. It's an iterative process. I'm trying to get better at it, a little bit better every day. Anybody who starts in this, you're not going to get it right. You're going to, I definitely have some dogs in my portfolio, some companies that are probably going to go to zero. And I think, if you are not comfortable with the possibility of complete principal loss, this is not a game for you. You have to have that investor mentality. If you want, more certainty, I would say stick to real estate or private equity or things that have a well-established business model and, it's cash flows. These are not typically cash flowing businesses.
For sure, some good advice. So just before we jump into the personal questions, we have one last question for you.
Sure.
So in the experience you've had in the companies you've invested in and work with, We're always kind of looking for that real entrepreneurial, heartfelt, driving story that really put that entrepreneur over the top. Any stories that come to mind that really blew your mind away with a startup that you work with or maybe invested in that just you didn't think they were going to make it and then took off like a rocket and they were able to overcome every adversity and just stuck to it and really dedicated and made it happen. I'm obviously seeding it in a different direction, but you choose what kind of works best.
A lot of my companies are earlier stage, and to be honest, the bulk of my angel investing has come in probably the last couple of years. Extern is like my first investment, ACCERN. They're a big data, company. I think that they have done well. Certainly they've made their mistakes, but I think the CEO is on the right path, recovering. And so, young kid, amazing. When I met him, I think he was fresh out of school, 22, but had the wherewithal to go talk to the people that he's able to recruit, PhDs to come work for him, talking to the highest level for on the sell side and buy side of financial institutions, the biggest hedge funds, and to be able to do that at 22, 23, whatever his age was at the time, it's pretty amazing. So kudos to him. I recently was a judge on a pitch competition. First time doing that, super interesting. There were three sisters, ages I think 11 through 13, that are building a Indiegogo for kids. So super, whether they fail or not or succeed, it's not the point. I think the fact that they are starting their entrepreneurial, career so young, super impressive. I hope that more kids get inspired to do that, because the platform essentially allows kids to do these kind of, startups for kids' ideas. And I think, building that ecosystem is important.
Awesome. I love it. All right, we're going to jump quickly into the personal questions. So question number one, what's your favorite sports team?
Ooh, I like the Seahawks. I'm from Seattle area. I don't follow professional sports as much as UFC. So that's kind of.
Oh, it's still professional sports. So who's your favorite country fighter then?
I'm a little bit old school. I like George St. Pierre, GSP. I'm of that genre when he started. He's retired now, but I think, amazing record, amazing person, very embodies the discipline of a martial artist, very well rounded, and a true gentleman when it comes to the fight game.
I love it. And he's Canadian. So we'll throw that out there just because that makes it huge.
Yeah. You gotta have love for our friends next into the north.
Yeah, he's a great fighter. And he does put a lot of value into the demeanor of how a sports person should treat an opponent, but also treat a match and the environment they're in.
Absolutely.
Okay, your favorite movie and what character would you play in the movie?
Pass. I don't have a favorite movie. I mean, I have certain genres, but there's no one particular one.
All right, fair enough. I was just thinking now, because of your martial art background, you were probably thinking of
Jean-Claude Van Damme or Steven Seagal or something. No.
Yeah, totally. Actually, I was thinking Jean-Claude Van Damme or something. Yeah, just or even Jackie Chan. No, that one's he's never been really. He's always been more fun.
Yeah, no, he's legit. Jet Li.
But he was legit, but he was more fun in his characters. But if you go to someone like
Jet Li,
yeah, like those guys were like they're super serious in their roles, but they were kicking butt. So they were kind of like totally different, like Chuck Norris and Jet Li and all these guys. They're really real tough characters.
Right.
I always played that, right? Whereas Jackie Chan always played less of a tough character, but obviously had the moves and sick moves.
Yeah.
He actually played.
I think that's why he had such a long-standing career, because not only was he a martial artist, but he was an entertainer. He made you laugh. He was, he could play a wide variety of roles, and both in Asia, and he's one of the few, I think, Asian actors to kind of cross over from Asia to the U.S. and make the U.S. box office.
Agreed. He actually filmed way back with Bruce Lee, so he was in a bunch of movies with Bruce Lee back
I think he
Jay
was
as
in
well.
Enter the Dragon. Yeah, when
Yeah, he
Bruce Willis
was.
looked big, big. Yeah.
So it made a big difference. But you're right, he was more dynamic, did a lot more things, and more of a character on the TV. So that made a big difference, right?
Yep. Absolutely.
Very cool. Well, Joseph, it has been awesome and a pleasure chatting with you. We got to learn a lot. We went across multiple spaces, which really is what matters. Learning as much as the way you think and how you operate and how the space works. So I think there was a ton of learnings for the startups and for the investors. So I appreciate that. And the way we like to kind of end off our shows is we like to leave you the last word. So anything that you feel that you want to share back to an investor or to the entrepreneurs, your advice, thoughts, feelings, whatever you like, we turn it over to you. But thank you very much again for your time today.
Yeah, thanks for having me. I really appreciate it. It was an enjoyable discussion. I think, we only kind of touched the surface. There's so many levels to this game. I think there are a lot of resources out there. I think Jason Calacanis, I'm a big fan of his book, Angel, and his podcast. If you're looking to get, smart on and understand some of the lingo and what happens, I think it's well worth a listen. They're free. The book is $20. I think that's a good place to start. I think there are a lot of online resources that are free or cheap that you could quickly kind of come up to speed, especially with some of the syndicates out there. Angel.co does a good job, and Jason has his own syndicate. That's an unsolicited plug. I'm not actually a member of this syndicate, but there are ways that you can kind of get into the game, even if you have a full-time job or you're just thinking about it. You don't have that much capital, but you can definitely dabble. I think some of the syndicates allow you to invest with as little as $1,000. So definitely ways to play this if you're interested.
Perfect. I love it. Thank you very much for the insight.
Pleasure.
Awesome. Thanks for your time today.
Bye-bye.
Okay, well, that was fantastic, man. Like, as much as I try to take away from not writing notes, I always end up doing it anyhow. But I really like the emphasis on the pro formas and being able to take the background and what he was able to work on. And the reason why I always love going into the background on the show with these investors is because they're always working off of what they know best. What did they learn from their numbers? What did they learn from their background? And those things really help you when you're getting into these spaces. We tend to think that we want to know everything and invest in everything, but take your background and understanding of the things that you focus on. That's going to help you define your thesis and what you're going to invest in. And that's 100% how Joseph has kind of worked through this. And as he mentioned through the background, his tech background, his numbers background, a lot of that's played into even the types of companies he likes to invest in and work with, which is pretty impressive and pretty amazing. He's done a lot of things in the space. Some things you can look at. He talked about umbrella insurance, impact investing. So figure out what really benefits you and where you think you fit on that investment cycle. Outside that, it was a great discussion, and you guys have a great day. And feel free to please follow us on social. We're on YouTube, Twitter, Facebook, Instagram, and of course, podcasts will be going through all of the major podcast channels. And you can find us at supportersfund.com or at opn.ninja. Looking forward to staying in touch. Have a great day.